A very good morning, ladies and gentlemen, and welcome to the NCBA Leasing webinar themed Big on Ideas, Short on Cash, the Power of Leasing. It is indeed a great pleasure to be hosting you today, and on behalf of the NCBA Group Managing Director, Mr. John Gashora, and the entire NCBA leadership, I would like to appreciate every attendee on this webinar for taking the time to log in this morning. My name is Emily Kinuthia, and I am the General Manager, Marketing, Communication, and Citizenship at NCBA Bank, and I will be your MC for today. We have an insightful discussion ahead of us, and I would like to extend a warm welcome to our distinguished speakers for this webinar, who will demystify leasing and will be sharing with us a wealth of information and insights around the power and future of leasing. Allow me to set the context for today's discussion. According to IFC's financial leasing report, one of the greatest impediments for small business owners is the lack of access to finance necessary to procure the relevant equipment required to help expand their businesses. Many have few, if any, assets and therefore lack the collateral required by most financial institutions to secure a loan or other types of asset financing. Leasing therefore provides an innovative solution to this challenge. It cannot be overemphasized that developing the leasing sector as a means of delivering access to finance increases the range of financial products in the marketplace and provides a route for accessing finance to businesses that would otherwise not have it. This in turn promotes domestic production, economic growth, and job creation by introducing new products and/or industry players. Leasing is therefore a critical catalyst to spurring growth in the SME sector and economy as a whole. And now, ladies and gentlemen, we will commence our discussion with opening remarks from Mr. Alan Dodd, who is the Group Director, Asset Finance and Business Solutions. He will then be followed by our keynote, and he will be making the introduction, and he will then progress into the rest of the program for the day. Welcome, Alan.
Are you hearing me now?
Yes, we are, Alan.
Yeah.
Please go ahead.
Yeah, apologies for that. I had my microphone on mute. First of all, let me extend a very warm and welcoming good morning to you all on this rather wet and cool morning. I also want to thank you all for sparing time to come and attend this the first of its kind, this NCBA leasing webinar. The primary purpose of this is really to heighten the awareness of leasing in the Kenyan market. It being a relatively new product, we want to unpack and demystify the product. Many of you will have heard of leasing, but maybe don't quite understand the benefits and how it works. Today, we will explain to you in some detail how it all works. It's also about recognizing or helping you to recognize the opportunities and the benefits, which are both financial and non-financial. We would like to increase the penetration of leasing into the Kenyan market. At the moment, it's at a very low level, and but we feel that with by customer education, we can increase our portfolio. Turning to NCBA Leasing, we first started 5 years ago as a fully owned subsidiary of the NCBA group. We were one of the first banks to venture into this business, and today we have a varied, large customer base, and we are financing all types of movable assets, from vehicles, medical equipment, IT equipment, and even gymnasiums. We have an asset base of approximately 3 billion shillings. Having introduced the subject, it gives me great pleasure to introduce to you our keynote speaker, Sudhir Ammanbal. Mr. Ammanbal is the Chief Executive Officer of Ammanbal & Halliday. He began his professional career in lease education, consulting, and publications by co-founding the firm in 1978. As a government advisor, Mr. Ammanbal has spearheaded lease consultancy engagements conducted on behalf of 20 governments, including China, Indonesia, Korea, Nigeria, and Russia. He has authored or co-authored 17 books on leasing, including his latest publication, Leasing, the Creative Financing Alternative, which was released in October 2019. In 2016, the Equipment Leasing and Finance Association of the USA inducted Mr. Ammanbal into the Equipment Finance Hall of Fame. He's a member of the board of directors of the Certified Lease and Finance Professional Foundation in the USA, the organization that awards CLFP credentials. He serves as a chair of its Global Expansion Committee, and he has a Bachelor of Commerce from the University of Bombay and an MBA from the University of Utah. With that, I just welcome Sudhir. Thank you very much.
Thank you, Alan. Thank you very much for the kind introduction, and more importantly, for having invited me to deliver the keynote address at this prestigious conference. It is truly an honor. Ladies and gentlemen, good morning. The weatherman tells me that it's a beautiful morning in Nairobi, and I'm rather envious because where I'm domiciled in the United States, it's snowing and very cold. The title of my presentation, as you can see, The Power of Leasing, is indicative of the objective of my presentation. In the next 20 minutes or so, it is my task to convince you that leasing is indeed the best option to consider when you acquire equipment or vehicles. And I'll say again, leasing truly is the best option. Alan mentioned earlier, and I was told earlier, that we have a rather diverse audience, and I infer from that many of you are relatively new to leasing. So I will start by defining a lease. I will then delve into the significance of leasing, where I'll contrast what's going on in Kenya with a few other markets. The guts of the presentation, the substantive part of the presentation, has to do with the benefits that are offered by leasing. We will spend quite a bit of time detailing each of those. And then I will briefly touch on what trends are taking place in the world of leasing. And then, as you would expect, I will take this to a conclusion. Let me start by defining a lease. I'm going to do that by first contrasting a lease with a rental product. The rental product is a cousin to the leasing product. You'll understand that better in a few minutes. but everybody is aware of the rental product. Each of us, all of us, has rented something or the other in our personal lives or our business lives. A rental is short-term. Well, what is meant by short-term? Short-term is defined as less than or equal to 12 months. The question is, who defines that? It comes from the accounting pronouncements. So a rental is short-term, less than or equal to 12 months. Rentals are full service. If you rent a car, the provider of the car not only enables you to drive that car, but the provider maintains that car, insures that car, and takes care of all of the other responsibilities incident to ownership. And at the end of the short period, be it a week, be it a month, you return the asset to the provider. From a business point of view, if we rent equipment or vehicles where the term is less than or equal to 12 months, the transaction is entirely off balance sheet. Neither the asset nor the corresponding liability appears on the balance sheet, and there is no footnote disclosure either. So now let's get to a lease. In large parts of the world, we call what you call a lease as an operating lease, be it as it may. The definition of a lease or an operating lease is as follows. The term is longer. Well, longer than what? Longer than a rental. So by definition, a lease has a term greater than 12 months. The lease can either be net or full service. You understood a moment ago what is meant by full service. Net is the opposite of full service, where in a lease, items such as maintenance and insurance are addressed by the customer. So whether a lease is net or full service depends generally on the customer intent, and then whether the lessor has the skill base to deliver full services, if indeed the customer wants other services. At the end of the lease, there are three avenues. You as a customer can either return the equipment, renew or extend the lease, or purchase the equipment. On the next slide, I'm going to contrast a lease with a loan or with a hire purchase, and it's best done through an illustration. I'm using a 100 shilling asset for simplicity, both on a loan and a lease. Both are at 18%. Both are 36 months. So the old expression, keep things constant. The difference, and I will explain that in a moment, is residual value, or as I call it, RV. On a loan or a hire purchase, there is no residual value. So let's immediately go to the lease. You can see in the illustration that the lease has a residual value of 25 shillings or 25% of the original equipment cost. Well, what is residual value? Residual is the lessor's estimated value of the asset at the end of the lease. So when the lessor does the lease for you, at the onset, they estimate, based on judgment, market research, and other factors, that the asset in question will have a value of 25 shillings. Let's take that further. Let's assume at the end of 36 months, you return the asset to the leasing company, and let's further assume that the residual value or the market value in the marketplace is exactly equals to 25, which is not really what's going to happen. It'll either be less than 25 or more than, but just for a moment, let's assume it'll be equal to 25. If it is indeed equal to 25, that amount can be looked upon as a bullet payment or a balloon payment that the lessor is receiving when you've returned the equipment to the leasing company. And because of the bullet payment or the balloon payment, the payment on a lease is lower. So to go over the consequences of residual value on a loan where it's non-existent, the payment is higher. The only risk that the financier has is the credit risk, the risk of default. And the nature of the transaction is full payout. Full payout essentially means on the loan, when you've paid 3.62 shillings, And when you've made the last payment, the bank or the lender has been entirely fully paid. On the other hand, on the lease, the payment is lower because of the balloon payment, which is really the residual value. The lessor has two risks, the risk of default and now a new risk, the asset risk, because the residual may not be equal to 25. And the nature of the transaction, because of reliance on residual, is non-full payout. In the next slide, what I want to do is go through this from a different point of view. Let's look at a loan or a hire purchase and contrast it with a lease. The legal ownership on a loan belongs to you, the customer. On a lease, it's the lessor who owns it. The nature, as we saw a moment ago, on a loan is full payout. On a lease, it's not. Services, loans are always net. Leases are generally full service. You saw the risk element. On a loan, the lender has the credit risk. On a lease, they have a dual risk because of the asset risk as well. A new thing from an income tax point of view, on a loan, because you purchased the asset, you, the customer, will get the wear and tear allowance. On a lease, it's the lessor who is entitled to the wear and tear allowance, and you, the customer, will be able to claim the lease payments or the rent expense as your deduction on your tax return. From an accounting point of view, loans are always on balance sheet. The asset and the corresponding debt will be shown in your balance sheet. You will see this a bit later. One of the benefits of a lease is that leasing can lead to either complete off-balance sheet financing, where neither the asset nor the corresponding debt appears in your balance sheet, or it may lead to partial off-balance sheet financing. I'll explain that further. So what I've done so far, ladies and gentlemen, is really contrasted a lease with a rental and a lease with a loan or a hire purchase. Rather briefly, I want to touch on the significance of leasing. Alan alluded to it, and you'll see that on my next slide. Let's take just one country and contrast it with Kenya. Let's take the United States. In the United States, leasing accounts for approximately 36% of the total volume of leases and what we call finance leases. Kenya essentially does not have finance leases. Do not get confused with that. These are more or less semantics. In Kenya, you have hire purchase. And if you take the numerator to be the volume of leases in Kenya and the denominator to be leases plus hire purchase, you will see what Alan meant, that the penetration rate is rather low. I call that the good news. The good news because the scope for leasing is substantial in your country. Let's now begin to look in the next section on the benefits that are offered by the leasing product. I'll explain each of these as carefully as I can. I've segmented them. The first benefit has to do with cash flow or cash management. Leasing often can finance 100% of the equipment cost. Unquestionably, it's subject to your creditworthiness, but that's more the rule than the exception. And what that does is it boosts your affordability. You're able to acquire equipment, acquire vehicles without laying any money down. Beyond that, leasing can finance what I refer to as the entire solution. Let's take an example. If you lease IT equipment, often in a configuration, you may have hardware and software. Lessors are more willing than banks are to finance the entire configuration of the hard and the soft collateral. And as you saw a moment ago, from a cash flow point of view, your periodic payment on a lease is lower than that on any other product. Let's now move to the second benefit that leasing offers, and that comes from income taxes. It's best illustrated. I've used a certain asset that is reasonably common when it comes to leasing in Kenya, supermarket shelves. And I've taken a hypothetical example for 100 shillings, where on one hand, you purchase the shelving, and on the other hand, you lease it. The lease in this question, and you don't see that, has 30% residual value. Looking at it solely from a tax point of view, if you purchase the asset annually, you get 10 shillings of wear and tear allowance. That's the tax break you get. But look what happens when you lease it. The rentals are fully deductible, and the rentals on this are 33 shillings each year. And therefore, each year, for all of the 4 years in question, you get a much faster tax break when you lease the asset as versus purchase the asset. Moving on to the next slide, the next benefit has to do with financial reporting, or one could simply call it accounting. Give me a minute to explain this. A new accounting standard was put forth and made effective approximately 2 years ago. Prior to that, all leases were off-balance sheet financing. I'll repeat that. Prior to the new standard, all leases were off-balance sheet. But subsequent to the new accounting standard, effective approximately 2 years ago, for, I'll simply say, non-SME customers, there is some sort of partial capitalization of the asset and the corresponding debt. I'll embellish this a bit more when we get into the panel discussion, but for the next 2 minutes, allow me to address just the SME sector in Kenya, as Alan mentioned, an important sector. So if you're an SME, the new accounting standard does not apply to you, and therefore leasing is definitely 100% off-balance sheet financing, which strengthens your balance sheet. I've given you some ratio examples. Your current ratio will be greater than otherwise because the debt is not booked, and therefore the current portion of the debt is lower than otherwise. Your return on assets will be greater than otherwise because the assets are not booked, and all other things being equal, with the denominator being lower, your ROA is higher. Your leverage ratio, your gearing ratio, which most of us want it to be lower than otherwise, will indeed be lower than otherwise because the debt is not booked. Going to the top of the slide again, 2 additional benefits from a financial reporting point of view. Your working capital will be increased when you lease. What is working capital? Working capital is simply current assets minus current liabilities. And if the liabilities are not booked, then working capital increases. For those of you who are publicly held, you're familiar with the fact that increasingly free cash flow is more important than earnings per share. Suffice it to say, because any illustration will be extremely complex, that leasing increases your free cash flow. Moving to the other benefits of leasing, there are 4 more. From a technology point of view, the mere fact that the lessor takes the asset risk means that you, the customer, do not take the risk of any deterioration in the market value of the asset. From a convenience point of view, because you're getting into a long-term rental, remember, a lease really, in its utmost of simplicity, can be looked upon as a long-term rental. So as you get into a long-term rental, for those of you, including governments, that typically have 2 budgets, the capital budget and the operating budget, leases can be appropriated from the operating budget. Leases, as you saw a few minutes ago, can be full service, which is really one-stop shopping. It makes it convenient. And then one of the priceless benefits in a lease is the flexibility at the end of the term. You're simply not locked in. If you buy an asset, either through cash, loan, or hire purchase, you're locked in. On a lease, you have the option of returning it to the leasing company. From a strategic point of view, leasing allows you to do what you're best at. It allows you to focus on your business and allows you to take advantage of the fact that usage is far more important than ownership. The last major category has to do with the financial category. Often, again, based on your creditworthiness, a leasing company may not impose financial covenants on you. Banks generally do that. And also, if the leasing company is comfortable about the asset being leased, which they should be, often they will not take any additional security or additional collateral. Lastly, and this may surprise you, in spite of leasing having numerous benefits that other products do not have, the lease product, on a present value basis or otherwise, is actually less expensive than any other alternative. I've done hundreds or thousands of real-world analyses, and 9 times out of 10, that's a truism. So, ladies and gentlemen, what I've done so far is hopefully convinced you through the detail that leasing really delivers some powerful benefits to those who lease. Moving on, let's quickly examine a few trends that are taking place in the marketplace. And you will see on the next slide that the trends are obvious. What is happening is in mature markets, new products, fairly esoteric products, such as synthetic leases, and there are a host of other products, are being put out that will soon come about in Kenya. Uberization, when Uber came to market, where we began to realize we don't have to own something, we can simply use it for our necessary period of time, that puts an increased focus on usage. Service contracts have come into play. I'll give you a quick example of what's called a subscription contract. This is done in Europe and the United States. Let's assume somebody wants to lease a Mercedes-Benz for 3 years. What Mercedes-Benz actually does to their leasing company, over that 3-year period, at the end of 12 months, they allow you to turn your car in and lease another model of your choice. And the same thing at the end of the 2nd year. So service contracts based on subscriptions have become popular. And lastly, just like in any other industry, fintech and artificial intelligence is playing a big role in the world of leasing. Let me now take it to a conclusion. And the conclusion that you will see in a moment is something I mentioned at the onset, and there is almost no need to vocalize it. And the conclusion is that truly there is no better alternative to acquiring equipment than through leasing. Thank you very much for listening to me. I hope the presentation was clear. Alan, once again, thank you very much.
Thank you very much to the speakers. Thank you, Alan, for setting the context around the value of leasing, especially to the small and medium enterprises, and for reiterating the role that NCBA is playing to ensure continuity for these businesses into the future through solutions such as leasing. I would also like to appreciate Mr. Amembal for demystifying leasing for us and articulating so succinctly the value of leasing over other types of financing. Thank you very much, gentlemen, for your contribution. A quick reminder to all attendees, for any questions or contributions to this conversation, please share your questions via chat and or Facebook, and we'll be taking those questions at the end of the panel discussion. And now, ladies and gentlemen, we are getting into the panel discussion for this morning, and one I am privileged to say carries a plenitude of leasing expertise. Allow me to introduce our panelists for this morning, starting with Mr. Sudhir Amembal, who spoke to us just recently. He is the chair and CEO of Amembal and Halliday and is a leasing expert with over 40 years of experience in the field. He has spearheaded leasing consultancy engagements conducted on behalf of over 20 governments, including China, Indonesia, Korea, Nigeria, and Russia. He has co-authored 17 books on leasing and is a member of the board of directors of the CLFP, Foundation in the USA. Welcome again, Mr. Sudhir. Our second panelist is Mr. Alan Dodd, and he also spoke to us earlier. He is the Group Director, Asset Finance and Business Solutions at NCBA Bank. He carries extensive regional and international banking experience spanning East and South Africa, Middle East, and Asia. Welcome again, Mr. Dodd. Our third panelist is Mr. Herbert Okundi Omune. He is the CEO of Sahara Energy, an oil marketing company registered in Kenya, and is an importer, exporter, and wholesaler of petroleum products. Herbert brings on board a wealth of experience in the oil, banking, and aviation industries. Welcome, Mr. Omune. Last but not least, our fourth panelist, Mr. Wanjohi Kangangi. He is the Sales and Marketing Director at Isuzu East Africa, a seasoned professional in the motor industry, having worked for Isuzu, Toyota, and CMC in various capacities. A warm welcome to Mr. Kangangi. The panel will be moderated by Mr. Robert Marete. He is the General Manager, NCBA Leasing, and he has over 15 years experience in the leasing industry in Kenya. A very warm welcome to all our panelists, and I now hand over to Mr. Marete, who will take us through the panel discussion. Welcome, Marete.
Thank you, Emily, and welcome all. Good morning, this cold morning. Welcome to this section of this webinar. I would wish to thank the panelists, Mr. Sudhir, Alan Dodd, Herbert, and Kangangi, for making time this early morning to make sure that we are here to have this exciting conversation. So I will go straight to the question. And we found Mr. Sudhir has told us leasing penetration in this market is quite low at 5% compared to Europe and other markets where we are well above that 5%. We've seen the government of Kenya has embraced this product as a way of motivating other players, and we've seen multinational corporates in it. And Mr. Kangangi, I would like you to discuss more about how the government leasing works. We've seen you've been participating in National Police Service vehicles, phase 1, 2, 3, 4, up to 6. We've seen the medical equipment services, managed equipment services for the medical health sector. And I would like you to take more time to just demystify to us how the government leasing has worked and what effect has it had to the businesses. Over to you, Mr. Kangangi.
Yeah, sorry, Mr. Marete, I think I was still on mute. So I would just like, I think I was just making the comment that leasing has been very well explained already by my fellow panelists. So I'll just get straight to the experience we've had with the government. And I think one of the points that has been made is the penetration of leasing in Kenya stands at about 5% today. Before 2014, before the government shifted to leasing, that must have been about 1%. So I'll just go through briefly the story of the government lease project. And about 2012, our current president was the finance minister. He tried to organize for most of the government procurement to shift to leasing because of all the benefits that have just been described. And at the point, there were a few hitches here and there. Then come 2013, he became the president, and he got obviously a bit more authority. So he was able to now overcome the hitches that had come before. So 2014, we saw the first government lease of about 3,000 vehicles and a lot of other equipment. And progressively, every year, we've seen a huge chunk of units and equipment getting dedicated to leasing from the government procurement point of view, with a target of getting to about 20,000 units of trucks and the vehicles on lease as the goal. So today, I think we've got something about 8,000 of vehicles on government lease and a lot of other equipment. So I wanted to just share with the team the benefits and the reason for the, part of the benefits that we've seen from this shift. One of the biggest issues around the leasing by the police, by the government, has been the government prioritized local assembly for their leasing plans. So what that did to the assemblers in Kenya, and the assemblers in Kenya are three. There is Isuzu East Africa, the largest assembly plant just behind me now. There is an assembly plant in Mombasa called the ABA, and an assembly plant in Thika. So this shift into leasing that was prioritizing local assembly, caused a lot more assembly activity to come back to Kenya. We used to have things like pickups used to be assembled in South Africa and imported here, fully built. Because of this need now to lease a lot of pickups to the police that had to be locally assembled, both Isuzu and Toyota started assembling the pickups locally. The other point about that the government was pushing for in this leasing is they wanted not only for you to assemble locally, but to also give a certain percentage of the components to be local. So you don't just assemble by bringing the completely built units in kits from Japan, but there was the assessment criteria included how much of that unit are you sourcing locally, and you get more credit if you are sourcing a higher percentage locally. So people like spring suppliers, the people around the industrial area that supply seats and seat frames and mufflers and a lot of other components in Kenya now started also getting a lot more business from this shift. So that was a plus from us. The other issue around this shift also was the whole value chain. Other than the component suppliers, we also ended up being required, so to speak, to engage partners in insurance, partners obviously in banking and leasing. And I'm telling you now, groups like NCBA Leasing, the whole leasing department would not have been viable before leasing became a government policy, because 1% of the penetration was not worthy. So this whole shift by government also encouraged that. Then supporting the vehicles across the country, we needed to, because the main customer for the initial lease was the police, and the police served the public across the country. We were required to make sure that every part of Kenya is within 50 kilometers of a service outlet. So we ended up, between ourselves and other assemblers, we ended up setting up a lot more service outlets across Kenya with the training and the equipment necessary to be able to handle these vehicles. So all in all, very big plus on that side, but the other, from the supply chain point of view. But the other issue that was also very important in this whole process was the service delivery to the community. I think you've just been told about the way that leasing, the responsibility when it's a full lease with service, the responsibility for maintaining that vehicle resides with the lessor. So when we leased out a vehicle to the police in Mandera, we were responsible for making sure that vehicle is on the road every day. And anytime that vehicle got off the road and couldn't serve the public, we are required contractually to provide the police with an alternative vehicle. So the Mwananchi in Lodwar, in Mandera, is always assured of service when you're on a lease, as opposed to before, when sometimes you'd call the police and their only vehicle is down and you'd have to make alternative arrangements. So the service level improved. Obviously, the maintenance of the vehicles also. If you see the police vehicles today and you remember how they used to be on the road some years ago, you can just see that the quality of maintenance is a lot higher. The last item I wanted to mention is also the intention of this whole shift to leasing, obviously, is to grow the local assembly, local component suppliers to the assembly plants. the allied industries like the NCBA, leasing, insurance company, and all those others that got the critical mass from this shift in leasing. But the other point was to make sure that for the average Kenyan that typically buys a used truck or a used pickup or a used car from that has been off lease in the UK or in Japan, after it's done, let's say 5 years, 8 years on lease, and then it comes here and it's the one on Gong Road that you go to buy. The vision behind this increasing leasing in Kenya is to make sure that that person now has an alternative of buying a vehicle that was locally assembled, has been on lease in Kenya, has been properly maintained by the franchise owners, and it's in good condition, but also just as affordable, or even sometimes more affordable than what you'd have taken from after it comes off lease from Europe. But at least the local one is obviously created local employment, is properly maintained, and is more suitable for the local operating conditions. So I think the leasing journey so far from 2014 to now, it's gone very well. We are now in the middle of discussing another, a further lease. We are calling it phase 6 because they go in phases, phase 1, phase 2. So now we're in phase 6 that we just started, that's looking at about 2,500 vehicles. And the whole industry is coming together, very excited about the leadership that the government has provided in this policy. Thank you very much, Marmarete.
Thank you, Kangangi, for demystifying that. We've really brought it well that we've recently seen the transformation in terms of how the vehicles look on the roads, the police vehicles, and we appreciate that leasing. Many of us, many of the panelists, many of the attendees may not have known quite why the change. So I will go to the next question that will be directed to Mr. Sudhir. Mr. Sudhir, you mentioned the leasing has numerous benefits, and you mentioned actually the cheapest mode of asset acquisition. I would like you to give more details on these benefits, just for the attendees to get to appreciate them. Over to you, Mr. Sudhir.
Robert, thank you. Thank you very much. Let me focus really on the last benefit. The last benefit mentioned that besides having a host of different benefits, leasing is actually cheaper than any other mode of equipment acquisition. Let me make a case for that. Very simply, I can say, look, if you compare a lease to a hire purchase or a loan, because of the existence of residual value, the payment on the lease is lower, and that makes it quote unquote cheaper. One could counter that by saying, oh, but a hire purchase or a loan could have a balloon payment as well. But my counter to that is as follows. Leases always have residual value, but loans and hire purchase do not necessarily always have balloon payments. So the simple case is that leasing is cheaper because the payment is lower. Now let's make the answer a little bit more complicated. For some entities who don't adjust the rental payment, but they present value the payments made on a lease versus, say, the payments made on a loan or a hire purchase. The present value of the lease payments would almost always be less than the present value of the loan or the hire purchase for 3 reasons. 1, because typically a lease does not have down payments. 2, because the residual value that the leasing company takes often could be higher, because they're an asset manager, could be higher than the market value of the asset that the lessee would otherwise sell it for at the end of the term. And lastly, because of the tax advantage, that the rental deductibility comes to the customer generally faster than the deductibility on the wear and tear allowance. So to summarize that last part, on the present value basis, owing to those 3 factors, no down payment, higher than otherwise residual value, and the faster tax break, leasing is 9 times out of 10 cheaper than any other mode of acquisition. Thank you, Robert.
Thank you, Mr. Shudil. And we appreciate your simple analysis of how to compare lease to a normal asset acquisition in terms of asset finance. Because ordinarily, a layman would do the multiplication of rentals vis-a-vis the multiplication of the payment of the loan, whereas the net present value is the most fair way to compare the two products, and also include the discussion about the deposit that is payable and the collaterals and the cost of doing those collaterals in terms of going the wrong direction. So my next question will go to Alan Dodd. Alan, NCBA Group was among the pioneer banks to set a leasing subsidiary, as you just mentioned. What impact has this had to the leasing industry and to the industry in general?
Thank you, Robert, for that question. It's an interesting question. As I mentioned earlier, NCBA Leasing was launched as a subsidiary of the NCBA Group five years ago. I think since then we've grown our business, and as far as our contribution to the industry is concerned, I think there's a number of points I'd just like to mention. The first point is scalability. Behind NCBA Leasing is the NCBA Group, which, as you all know, is one of the largest financial groups within this market. It has a shareholder equity value of 72 billion shillings. So behind us stands this large group, which is able to enable us to bid for large transactions, where to scale up, and that's particularly important, particularly in as Kangangi was mentioning, the government's initiative to do more leasing. So we feel we have and will participate more in that particular area. But not only that, I think we bring some credibility to the market, and structure as well, because within our group we're able to structure facilities in such a way that we have the resources and capabilities to do that, to structure facilities for our customers. Also, I think we provide a non-stop shop, which is quite unique in this market, because not only are we able to provide leasing, but also other financial products to our customers, such as working capital facilities, such as trade finance facilities, foreign exchange, etc., etc. So we're able to provide to that customer a one-stop shop, not only leasing, but also other financial products, which is quite, I believe, quite unique in this market. The other point I'd like to mention is that by dealing with NCBA Leasing, the lessee is able to deal with two parties. Previously, and going through a leasing company, there will be a tripartite agreement. There'll be a financier, there would be the leasing company, and the lessee. So you have a tripartite agreement, which sometimes can throw up complications. By dealing with NCBA Leasing, it's just a lessor-lessee relationship. So there's only just two parties, so that it simplifies the transaction. Not only that, I think we can also provide competitive pricing. By utilizing the resources of the group, we're able to provide competitive pricing. So I think over the 5 years, possibly we've created more competition within the market, and that has enabled customers, lessees, to benefit through lower pricing, lower rentals. So I think that's really all I'd like to say on that point. But we have an ambitious plan within NCBA Leasing to grow our business. We think there's a lot of opportunities, and that's really one of the purposes of this this webinar is to demystify and increase product awareness amongst our customers and also our potential customers. Thank you, Robert.
Well put, Alan. Thank you so much. We'll go to the next question, and I will put it to Albert. Albert, from your experience in corporate finance, could you tell us why corporates prefer leasing as opposed to debt financing in terms of asset acquisition? Because we've seen in the 1% that Kangangi talked about that was there before the government leasing came in, all this was with the top corporates, which I am aware you worked with in terms of looking at ways of asset acquisition and settled on leasing. Over to you, Albert.
Thanks, Robert. I think the truth of the matter is that acquisition of new equipment is very expensive. And if you look at a capital-intensive industry, say if you always need to cash product purchase inventory needs. So the reason why we read as a business we prefer going the leasing way. First of all, fundamentally, as a business to protect that can be used to cover our operational and working capital needs. And if you look at it from a leasing point of view, and as Peter had alluded to this earlier, most of the time we find that a leasing solution will give you 100% financing. Opposed to look at debt, and there's always a balance of 80, 20, 90, 10. And but because there's an underlying asset, usually that we prefer leasing because leasing will give you 100% financing, and again, depending on what you're looking for, it can be a full service lease, right? In the sense that if when you try to purchase items like equipment such as vehicles, so it is a full service lease. The maintenance is taken care of. That leaves us as a business to be able to maintain our core business, buying and selling, and be able to continue growing market share. And again, one of the biggest advantages of leasing is that the item that today talked about for the residual value, because depending on the view that the lessor takes on the residual value, you find that lease financing is better than debt because you're only paying, the lease payments will be lower because based on the residual value, you're not paying for the full asset value, as opposed to debt where you'll be running down the loan all the way to zero. And also, one of the reasons why we also prefer leasing is that if you look at a lessor, and if I take an example like NCBA, you've been in this business for a long time, and you speak to manufacturers like Kangangi. The lessor is able to get some economic benefits or negotiate lower rates that can also be able to pass to the lessee, and that also then brings down the cost of the asset and also lowers down the lease payments. And at the same time, if you look at and also from a tax point of view, the tax deduction, the tax benefits that comes with leasing. So there's a lot of benefits that come with this, and of course, the risk of obsolescence is taken care of because the lessor will do their research. And take an example of Mercedes. If there's a new asset that has come in, new technology has come in, they're able then to pass on that benefit to the lessor, where you return the old asset and get the new equipment and always update it all the time. And with those advantages coming in, then the company can be active of it.
Thank you very much, Albert. Yeah, we got that message clear that obviously you almost mentioned to Kangangi that he's extending larger discounts than necessary to us. Yeah, so we'll take that privately. I take the next question to Kangangi again, and this is about what motivates dealers like yourself, like Isuzu East Africa, with all the financial muscle we know you have, to partner with NCBA Leasing and not do the leasing directly to the government or to the corporates. Because many would ask, why are you passing through the NCBA Leasing and not directly to the end lessee? Over to you, Kangangi.
Yeah, thank you, Mr. Marete. So I think we are already very clear about why we offer leasing as an alternative, because I think Sudhir has done a really good job of explaining the benefits of leasing versus outright purchase. But the one thing I wanted to just mention is also if you think about a lease, because it's over 4 years and it's going to be what the price at the beginning, less then plus the maintenance during the period, and then less the resale value. A brand like Isuzu, where the resale value is very high in the market for Isuzus, the maintenance costs are very low, because we obviously have the scale and the network across the country. Leasing is ideal for us because it really portrays the strongest aspects about brands like Isuzu. So it means when we are quoting a lease, we are able to get very, very, very affordable rentals because our maintenance costs are low and our resale value is extremely high, just because the demand is that high. But the question you're asking also is about why we opt to partner with people like NCBA Leasing rather than purchase directly. And the big issue is, I've told you earlier that the whole philosophy behind leasing, the biggest shift from the 1% to 5% is the government vision. And the government vision was to try and make sure that we build capacity as a country, so that between ourselves, the assemblers, we do really good assembly. The NCBA Leasing do very good, write up very good leases. The insurance companies do a very good job of that. So it's to make sure that the skills and the capacity upgrade is in the whole ecosystem. You don't want to be just the island that is handling this, and then because on your own it's not sustainable. You need to make sure that the full ecosystem scales up. And there's also, like you have picked up from Sudhir, leasing as a concept is a very technical area, and there is value in getting the skills for handling that concentrated in a place like NCBA, where the guys already have a very strong financial background and the law supported. So I think for us as Isuzu East Africa and most of our other colleagues in the assembly sector, we prefer just doing the assembly and then working with the leasing firms and insurance firms to make sure that they also get very good to support what the government is doing. So we want the whole ecosystem to transform, not just one island of it. Thank you, Mr. Mare.
Thank you very much, Kangangi-san. There is one item that you deliberately avoided to mention, that you avoid tying down your cash flows. And that's the key reason why you come to the banks that have the money to basically do the leasing. So for equipment vendors who are out there to lease, we found medical equipment companies getting a request for placements, motor companies getting inquiries from companies that want to lease directly from them. And what that does to your business is basically chokes it, because all you are doing, you are taking all the oxygen from your business directly to give to your customers. Whereas your business is buying vehicles, or rather assembling vehicles and selling them off. Now, if you get into financing, then you'll have to borrow more to get into that. So for that obvious reason, the companies, the vendors, the equipment vendors, and the motor dealers, it's very important for you to focus on the core business of vehicle assembly and sales, and leave the leasing business to the leasing companies, as we have the cash for that. Cash is our stock, but for you, vehicles are your stock. So I will go to the next question that I'll take to Mr. Shudil. Mr. Shudil, you mentioned that leasing penetration in Kenya is very, very low. And we've seen you've consulted for government, you consulted for international leasing companies and banks, and with your 40 years experience, I believe you should have some way forward or what can be done to increase this penetration from its current levels. Over to you, Mr. Shudil.
Robert, that's a fair question. I'll get to what can be done in a few minutes, but let's look at the question in the entirety. let's look at what factors really impact the penetration rate for leasing in any one country. I put them into two categories. I call them the non-controllable factors and the controllable ones. Well, the non-controllable factors have to do with the age of the industry. Common sense would tell us the newer the leasing industry, the lower the penetration rate. And relatively speaking, in Kenya, relatively speaking, compared to mature markets, leasing is a new product, notwithstanding that it's been offered for at least 10, 15 years. But in other markets, it's been offered for 50, 60, 70, or 100 years. The second factor, that's again non-controllable, has to do with macroeconomics, essentially the GDP growth in any particular country. Leasing is absolutely cyclical. If the GDP increases and increases substantially, so does leasing. If GDP declines or is flat, then leasing can either be stagnant or will decline. The third factor, having to do with penetration rate, it's quite complex. It has to do with what I call the leasing infrastructure. What are the legal, the tax, and the regulatory rules within any country? Do they favor leasing? Are they neutral to leasing? Are there disadvantages to leasing? This would not be, I'm sure you agree, the forum to discuss in detail what the legal, tax, and regulatory environment is in Kenya, but that certainly impacts the penetration rate. So the non-controllable factors are the age of the industry, macroeconomic environment, and leasing infrastructure. The controllable factors are twofold, essentially having to do with the lessor and the lessee, as Alan mentioned, just two parties. From a lessor point of view, it has to do with lessor entrepreneurship. How entrepreneurial is the lessor? And this is where, honestly, having known Alan for at least about 7, 8 to 10 years, when he was with NIC as well, and having known you, Robert, and without being patronizing at all, I commend both Alan and you on taking a very entrepreneurial role to the leasing world by forming a wholly owned subsidiary that offers leasing. But the most important factor that impacts penetration is what I call lessee behavior. Lessee behavior is put into two categories. The awareness of the product. Generally, in emerging markets, not to single out Kenya, generally in emerging markets, the customer awareness is low. And Alan mentioned that at the onset, saying that one of the objectives of this forum is to increase awareness. The second has to do with the psychology of ownership, not just in emerging markets, but in many markets. There is this unnecessary psychology of ownership. I forget exactly which Greek philosopher it was who said this, but trust me that centuries ago, either it was Socrates or it was Plato, one of them said, the profitable use of an asset is far more important than the ownership of such. So Robert, again, the controllable factors to increase penetration have to do with the lessor being entrepreneurial, the lessee being aware of the benefits of leasing. Thank you, Robert.
Thank you so much, Mr. Shutil. At least now we know which we can control and which we can't control. And yes, I believe we'll take this forward. And from what you've from your answers, Mr. Shutil, I'll take the next question to Mr. Abbott that basically addresses the psychology of asset ownership. So, Abbott, we've seen the ownership in our culture, in our Kenyan way of being, is that is this mine or not mine? That's the psychology of ownership that we have. How has it limited the optimal capital efficiency and optimal capital utilization in organization, in corporate speaking?
So I think I'll just, thanks, Robert. So I think I'd reiterate and say that that the value of the asset is driven by its use and not ownership. So sometimes we tend then to invest in the asset and buy the asset, and you ask ourselves, and what is the benefit of having this asset in your balance sheet. You know? But as an entrepreneur or as a business, I think a business probably needs to ask themselves things. You probably ask yourself that, how long will you need the asset? Is it for a short term? Does the asset really play an integral role in the overall success of the business? Does it speak to your core business? And will it really be, will the asset be outdated in the future that will need replacement? And also, what is the nature of your business? What is your core business? I think that is a fundamental question. What is your core business as a company? And you also need to look at the asset and say, will it need specialist support at some point? So then, once you consider all these items, then you then have to then ask yourself as a business that then will it be the asset or to buy? And with this, for me, I would say, in my point of view, a business for efficient capital utilization. A business then needs to lease an asset if they want to have cash and maintain enough money to meet the requirement. The fact that the asset will become an outdated point and the investment, something that you don't have to buy and commit cash to and be able to get an upgrade. The equipment actually needs special support of leasing the assets that the SOC can be able to organize the special support as part of the lease. We are told that a leasing solution can be 100%, can be an entire solution. I mean, it can be a complete package. At the same time, if you're not sure how long you need the assets, I mean, how long the project will last, whether it's 1 year or 2 years, then you're better off leasing the asset and just be able to modify the lease terms as you go along. So, so those are some of the things that a business want to then consider, and sometimes does not benefit when it actually do. You actually own the asset as you know it, and just repeat again that the value of the asset as an economic business is driven by.
Thank you very much, Albert. We got that clear. The value of the asset is in the use and not in the ownership. And the culture is slowly changing. We got to do it better to make it to make the awareness actually, especially to the SMEs, that if you're buying a brand and the brand has 20 slices and you only need 10, you don't have to buy the whole bread. You buy your 10 slices and move on. So I'll take the next question to Mr. Alan on NCBA leasing. You mentioned part of the propositions you give, and part of it is the sale and leasebacks. How does it work, and how does it benefit the lessees? Over to you, Alan.
Thank you, Robert. Also, just to add on to what's just been discussed by Herbert in terms of ownership versus leasing. I think, when I often ask customers this, is your core business to own assets, or is it to use assets? And I think it's it's obviously the latter, to use that asset. If they're in a manufacturing business, to use that piece of machinery to produce the end product. If you're in the transportation business, to use that truck or prime mover and trailer to move goods around the country for the customer. So it's really to use that asset, and I think that's a key point. I mean, in some other markets, if you look at South Africa, no one buys vehicles. Everyone leases vehicles. Everyone, and there's so many leasing companies down there. And that's not only at the corporate level, SME level, but also at the retail end, at the personal end. Everyone leases vehicles, because after 2 or 3 years they want to trade it in, get the next best model, so they're always ahead of the curve in terms of technology, and obsolescence does not play a part. So I think there's it's something here which I often, when I'm talking to customers, they tell me that no, I want to own this asset, and I want to own it at the end of the financing period. But when you look at all the benefits and unpack all the benefits that Sudhir has mentioned, you know, it's a compelling proposition to use that asset. All the maintenance, insurance, all the hassles associated with that are passed on to the lessor, NCBA Leasing. So there's significant benefits. And one of sale and leaseback. I mean, we've talked so far about new assets, whether they be vehicles or computers, IT equipment, office fit-outs. We've talked about new assets, but an interesting one, particularly in today's environment, is sale and leaseback. Customers have assets, they've bought assets, they've taken loans to purchase assets. They have assets, fixed assets on their books, movable fixed assets on their books, which in you know, a couple of years ago made a lot of sense. Today, with the present economic environment, whereby I think cash flow is critical, we're seeing an appetite for customers who have those assets to come to us and say, look, I want to sell them to you, then lease it back. So what does that mean? That means to say the customer will sell the asset. Let's take a fleet of trucks, say. They sell the asset to us, the 10 trucks. We buy them for cash, so the customer gets cash. Well, cash, we credit their account. They get the value of those assets today credited to their account. Then we lease back to them. It's all done simultaneously, a sale and lease back. So the customer gets the benefit of using those assets, continue to use those assets, but the benefit of cash in the bank, cash flow. They have the value of those 10 trucks in their bank account, which they can use. And today, because there's not a lot of liquidity in the market as a result of the present pandemic, and I think there's a great deal of appetite for this sale and leaseback. The customer also gets the benefit of retaining those assets, liquidity. He also gets all the benefits from outsourcing in terms of the administration, the servicing. If they are Isuzu vehicles, then they get the benefit of outsourcing all the administration, the servicing, the insurance, so that we will provide to the customer those 10 trucks, so that he can use. If they break down, then that's our responsibility. We have to, or is involved in an accident, then it's our responsibility to claim on the insurance and give to the customer a vehicle for use. And also at the end of the lease, we dispose of being NCBA Leasing, we dispose of the asset and take all that, I think, hassle away from the customer. So I think that's the sale and leaseback in this environment today. I think there's a lot of potential for customers, and whether you be a corporate or SME customer, there's that opportunity. Thank you, Robert.
Thank you, Alan, for that. Thank you for making panelists, especially the manufacturers and the other enterprises, just to understand that if you already made that decision to purchase and you want about leasing today, it's not too late. Those assets that you've already purchased, we can take them up as NCBA, give you your cash. As Albert has said, cash is king. So take your cash back to the business. Let us give you all the other benefits of leasing. My next question will go to Mr. Shudil. Mr. Shudil, we know the accounting system, IFRS 16, came into effect in 2019. And this left some corporates and SMEs wondering where is this placing us? What is the benefit of especially the off-balance sheet financing? So I would like you to basically give us some details on the partial off-balance sheet benefits of leasing in the context of the IFRS 16. Over to you, Mr. Shudil.
Thank you very much. Let's go back before January 1, 2019. The accounting pronouncement was called IAS 17, International Accounting Standard Statement number 17. And as per IAS 17, all leases were off balance sheet so long as they qualified as operating leases. There were some criteria that the lessee had to meet. So if a lease was deemed to be an operating lease, then all lessees treated those leases as off-balance sheet financing. Then came IFRS 16, the new accounting standard. Let's deal with SMEs first. And Robert, if I may, I'm going to take one of the questions answered by one of the individuals. And the question is, how does IFRS define SMEs? Well, IFRS really does not define SMEs. As most of us know, an SME is defined differently in different countries, based on the number of employees, based on the turnover. So really, some government authority in Kenya has definitely defined what an SME is. So the definition of an SME does not come from IFRS. SMEs in Kenya, as defined by the government, are exempt from IFRS 16. And the long and the short of that simply means that if you're an SME and if you enter into a lease, the lease gives you off-balance sheet financing. Essentially, neither the asset nor the corresponding debt is placed in your books, a huge benefit. Let's move on to the non-SMEs now. With non-SMEs, I mentioned this briefly during my presentation, you still have what I call partial off-balance sheet financing. Let me use an example. Let's say that there's a fleet of cars or a fleet of trucks over a certain period of time, and that the residual value on that is 30%. Again, there's a fleet of trucks, a fleet of cars, and the lessor has taken a residual value of 30%. The non-SME still has to capitalize that lease, but only to the extent of the present value of the rentals. So the residual does not have to be capitalized. And in this hypothetical example, the present value of the rentals will be somewhere around 85%. So if a non-SME leases, they would put an asset in their books for 85 shillings and debt in their books for 85 shillings. But compare that to an outright cash purchase, a hire purchase or a loan. If you do outright cash, hire purchase or loan, 100 shillings is placed in the asset under assets and under debt. So partial off-balance sheet financing still offers an advantage to non-SMEs. So as a summary, the benefit of IFRS 16, depends on whether you are an SME or not. And if you are, you get full off-balance sheet financing. And if you're not, you still are eligible for partial off-balance sheet financing. Thank you, Robert.
Thank you so much. Thank you so much, Mr. Shudil, for making that, demystifying that bit. I will take the next question to Alan. And Alan, you mentioned banks are involved in the leasing transaction. And I would like you to say more on what roles banks play in the growth of this industry. Over to you, Alan.
Thanks, Robert, for that question. I think the banks play a key role. I mentioned before that they provide the financing for the purchase of the asset to the leasing company. For NCBA, obviously that's one and the same because we're all part of the same group, which makes it very easy and the terms flexible because we're all part of we're all part of the same group. I think the banks also provide a useful function in terms of the credit approval process. They're very familiar with assessing customers' application from a credit point of view, whether their ability to pay the rentals throughout the lease period. I think the banks have a lot of expertise in that area. They also can help with some of the structuring. I've mentioned earlier on some of the more complicated transactions in terms of cash flow, ring fencing. It's the banks have a lot of experience in that area, and generally the sort of risk management structures. But one area which I just like to, I think Sudhir mentioned about there's two aspects: there's the credit risk and the asset risk. The asset risk is something that should be very much left to the leasing companies, because you're assessing that residual value at the end of the lease. Is it still, I think in Sudhir's example, 25%, or is it moved to 10%? There's a lesson. So something which I think has to be kept very much the prerogative of the leasing company is this assessing the asset risk and making sure that the asset's kept in good condition. If it's a vehicle, is it being serviced on time? Looking at the service reports, is the vehicle being driven correctly? On our roads today, you can see some vehicles are not well maintained, not driven well, and that's a risk to obviously to the leasing company, and that's something that the leasing company, NCBA Leasing, we watch very closely. How often the vehicles are serviced? What are the reports we're getting back? How are they driven? Now with tracking devices, we can see whether there's excessive braking, cornering, acceleration, speeding, etc., etc., etc. So that's something which we, on the leasing side, we watch very carefully. Which on the bank side, there is not that expertise managing the assets. The bank is really there they can look at the credit approval side and assess the credit worthiness of the customer. Are they able to pay? I don't think there's anyone better than banks to do that. Also, the other one final point which I just like to mention is that the banks also is a source of business, client referrals to the leasing company. We are in the privileged position, NCBA Leasing, of being able to, with the relationship managers, identify corporate customers who are or corporate, SME, and retail customers, for that matter, may be eligible for leasing and would benefit from leasing, and that's all part of our client value proposition that we can bring to the table, which is quite unique because I don't think any other bank really can do that. So those are what the banks bring to the table in terms of leasing, Robert.
Thank you so much, Alan. Thank you so much. At least now we can understand why we talk about banks in the leasing business and why NCBA Leasing and NCBA Bank. So the NCBA Leasing expert in asset management, NCBA Bank expert in credit risk. So I'll take the next question to Mr. Kangangi. And this talks about to what extent a dealer partnership with leasing companies bring value to the lessees.
Yeah, so thank you very much, Mr. Marete. I think a lot of the benefits already Alan has alluded to them, because when you make sure that you've got a good structure to do credit appraisal, to obviously help us with our cash flow and all those other issues, and the network that they have, the banks have, and IT systems, they all make the leasing product more efficient, ultimately more efficient to the customer and more affordable. But one other point I would like to add is also the fact that with our leasing partners, we're able to structure products that just suit certain customers, lease products that just suit certain customers. And I'd like to share one that we've just gone through now, where we looked at matatus. Most matatus, you know, the 33-seaters, most of them are Isuzus. And we looked at, they work together in circles, and the drivers are usually the guys that spend most time in the, you know, on the day-to-day running the matatus. But then there's an owner who's usually like a doctor or an employee at Isuzu East Africa that just meets the drivers at the evening to talk about what went on. So what we talked about with these circles is how we can have a leasing product that would enable the drivers to ultimately own the matatus. And we've just started off with about 100 of them, 100 matatus. And because leasing doesn't require any upfront payment, and the circle is good enough and the financiers know the circle, they were able to, get 100 units, about 100 units out to the circle. They'll be listed in the same name of the circle, but the drivers assigned to each of these would have a side contract that says if you run this matatu well, after 4 years, you'll be able to have it at, let's say the value of that unit when brand new is 5 million. So after 4 years, you know, 25-30% is about 1.5 million. So the driver has this incentive to manage this product very well. He's the one on a day-to-day running it, him and the conductor. But he knows that if he does that well, in 4 years' time, he'll have an opportunity to transition from a driver to an owner. And these guys, the typical drivers are in their late 20s, early 30s, the responsible one. So by the time the guy is in his mid-30s, he'll be able to own one of these units. So that product we just launched, and I think it's one of those that are very exciting. We've done it with the matatu circles, and we wanted to start with the circles because they are seen as kind of the most challenging operationally. So if it can work for the circles, for the matatu circles, it will very, very easily work for sand harvesters, for guys delivering hardware, just looking for a way to make sure that the person that is running that business for you, the one that's running your truck for you, is strongly committed to its well-being, because sometimes the disconnect comes in where the guy is feeling a bit like he's exploited and he's always going to be a driver and will always be an owner. So that leasing product helps bridge that gap. And there are many more like those that we sit down with the leasing partners and talk through with the customer, because the leasing partners have a very intimate knowledge of the customers, the customer behavior, and obviously the customer finances. Thank you, Mr. Marete. Marete, you're on mute.
Thank you, Kangangi-san. Sorry for that. And before we go to Albert, I would like to just mention a comment here from Colgate, Esther. I agree with Alan. We at Colgate Palmolive have experienced the benefit of vehicle leasing, and is the way to go. No turning back. So that's a good compliment, Kangangi-san, for what dealer partnership is doing to deliver value to the end customers. So the next question goes to Albert. Albert, given the COVID-19 pandemic, a lot of businesses have suffered due to lack of cash flow, or rather constrained cash flows. What would you advise, especially to the SME owners, so that they are able to take advantage of this product and grow their businesses? What would be your advice to them?
Okay, I think as we've mentioned that, Marete, can you hear me? Is it clear?
Clear.
Okay, all right. So I think, as we mentioned, that the fundamental benefit of leasing is cash flow. I mean, and cash flow has never been so important as during this COVID time. I mean, the economic uncertainty that has been brought about by COVID has ensured that more than ever before at this point, is maximizing cash flow is very important, has become very important for businesses during these times of uncertainty. So, I mean, at this point, keeping more cash at hand means more financial flexibility to the business. I mean, it actually frees up cash to deal with any unforeseen challenges that the business that may come about as a result of this COVID-19 pandemic, because we're operating in a open shut kind of period whereby at one time governments are locking down the economy, they are really reopening it again and shutting again. So there's a lot of uncertainties. So we need to be able to free up and be able to keep as much cash as possible for the business. And that is why, from a CapEx point of view, SMEs and other businesses need to be able to embrace leasing at this point more than ever before, because of the uncertainties that we are actually experiencing. And when you go, because even with the COVID environment, the companies and businesses still need to grow. They still need to take advantage of opportunities, and leasing is a very good way of refreshing equipment. I mean, new technology is advancing, so it's a way of refreshing equipment. It's one way of reducing maintenance. I mean, if you have a full service lease and be able to reduce downtime for equipment downtime, and be able to make the assets more productive and be able to produce more. So at this point, also, I think businesses can also consider sale and leaseback opportunities to be able to improve their cash flows. I mean, during this time, because at this point, then the cash flows will help a business be able to take advantage of any potential growth opportunities that COVID might bring to the table. To the extent of, if you have cash, then you can actually acquire a competitor who may not have weathered the storm very well during this time of COVID. And just to go back to what Sudhir mentioned about IFRS 16, I mean, this is one of the few times that the accountants have actually come to the rescue of the industry. I mean, with leasing, you can actually now take advantage of rent concessions. You know, the standard actually allows the lessor and the lessee to agree some rent concessions where they can agree to reduce or waiver or even defer the lease to a different period under certain conditions. And one of them is that the rent concession should arise directly as a result of the COVID-19 pandemic. That's number one. And number two, that the amount payable under the lease stays the same or reduces. And number three, that there are any other fundamental changes to the lease agreement. So those are some of the benefits that we can see COVID has brought to the table, to the extent that if you're able to reduce the leases or the lease stays the same, you can still recognize an accounting gain in your P&L as a result of that concession that the IFRS 16 has given us specifically during this COVID period. That's all from my end. Marita, you're on mute.
Thank you very much, Albert, for demystifying that bit and telling our panelists how the businesses can take advantage of leasing. Although I didn't quite like the bit of acquiring the struggling competitors. Yes. So I will go to the next question. And this is the final question, as then we go to the questions from the panelists. We've seen several questions from the panelists. We try and address them. But the final question to the panelists, I believe, Albert, you mentioned this part, so I don't need to include you in this, but it's just about the final question is, what is the future of leasing in view of the shift of market trends and the impact of COVID-19 pandemic, especially on corporate businesses? So I'll take this question directly to Kangangi, then go to Alan, then we conclude with Mr. Shudir. Over to you, Kangangi.
Yeah, thank you, Mr. Marete. So I think most of the panelists are agreed that the benefits of leasing will help companies go through the recovery from COVID. From the cash flow point of view that Albert has just talked about, also the appraisals that go on. And one other point I wanted to just make to leasing as a concept helps companies get more efficient in their operations. I see, for example, we lease to schools for school transport. And sometimes before you start leasing, the school is not really very aware of how much it costs them to run that bus. So they just charge in a haphazard manner. If you're going to Githurai, it's this much. If you're going to that. But once you go to that school and tell them now to lease a bus per month will cost you this much. Now they immediately go back and start making sure that what they are charging is obviously a bit more than that. So I think leasing will also help SMEs and other companies get more efficient, conserve cash, and obviously survive and thrive during the post-COVID recovery period. So I'm seeing the future is very bright for leasing. Thank you.
Thank you, Kangangi-san. Thank you. Over to you, Alan.
Yeah, I think leasing, if you look at, I remember talking to Sudhir a few years back about how the asset finance market has changed, has developed over the years, and it sort of goes from installment credits to hire purchase, which is today is very large in Kenya. In fact, most of the asset finance is through hire purchase, to leasing. So, I can only elaborate more on what my fellow panelists have said. From a cash flow perspective, in COVID, it makes sense. And then, going beyond COVID, it's going to also make a great deal of sense for customers to lease rather than acquire, because of what we've mentioned. I can see if for NCBA leasing, we have big plans for our leasing operation. We feel that there's a lot more we can do, not only on the government side, but also on the private sector side, the corporates, and eventually, I think even on the retail end, vehicles, we will eventually get to that leasing model that they have, as I mentioned before, in South Africa. I think there's a lot of there's a great deal of potential there. I think for customers today to focus on their core business, let the provision of assets, leave it to the leasing companies, and just focus on their core business. I think there's a lot of opportunities for everyone. So as NCBA Leasing, we're there to help and guide customers in this sort of new field. So I think that's all I wanted to say. Thank you, Robert.
Thank you so much, Alan. Just to hand on what you just said, I just saw a comment from Pratik of Sunburn Business Services. Leasing options provided by NCBA for assets given by businesses has given the business the flexibility to tide over difficult times of cash flow. NCBA has always been very supportive, and the product they have in the market are suited for the most businesses. Thank you, NCBA Leasing. So that's a compliment that talked to what Sarah just mentioned. We'll go to Mr. Shudir for this final question before we go to the questions from the panelists. Over to you, Mr. Shudir.
Thank you, Robert. COVID has been an unusual situation in all countries. And as I've spoken with leasing companies, who are my clients in many parts of the world, I more or less get the same story. It's quite obvious that the business community, SMEs, corporates are suffering an economic downturn, and cash is more precious than otherwise. When I ask my clients in different parts of the world as to whether that has impacted the quantum of leasing they do, they say not necessarily, because when there's a cash crunch, all other things being equal, it's easier to get a lease than a loan, because the asset-based manager is perhaps more comfortable doing a transaction which is a structured transaction. For example, a step-up lease can be done, or a grace period lease can be done. Now, exceptions have to be made. We've all said leasing doesn't have down payments. Well, but if one leases to somebody who is facing a cash crunch and whose creditworthiness may have gone down a notch or two, then with a down payment, maybe with additional security, maybe with a structured lease, it can be a win-win for both the lessor and the lessee. And that's what I'm seeing with many of my clients in many parts of the world.
You're on mute.
Thank you very much, Mr. Shudil. And sorry for that. I will now go to the panel questions, to the questions from the audience. And the first question goes to Alan. Wondering what leasing options are available for agricultural-based industries like tractors. We have seen motor vehicle options. Alan, maybe you can address this one. You're on mute, Alan.
Can you repeat the question?
Yes. Wondering what leasing options are available for agricultural-based industries like tractors. We have seen motor vehicles.
No, I think for tractors is no different. We finance tractors. From a credit perspective, it's okay. From an asset management perspective, it can be managed as well, because those are the two risks, as we mentioned before. The only issue sometimes with agriculture is the seasonality of their business, and the fact that they are prone to droughts, flooding. Those are additional risks from a credit side. But from an asset management point of view, yes, that's not an issue. So I would imagine that what would be more attractive would be the commercial farmers who have resources to see themselves through difficult times, and maybe with irrigation, and they're able to overcome some of the risks I mentioned. So yeah, it is possible. I would suggest that the author should maybe contact us, and we can discuss it further. Will we be Robert, we will providing contact details at the end, or?
Yes, we'll provide contact details at the end.
Okay.
So we will go to the next question. Is Andres Tukangangi. Why is the uptake of leasing relatively low for long distance large fleet owners?
So I think, Mr. Marete, part of the issue is just what we said about leasing is just coming of age in Kenya, including getting the structures in place and all these things. So we started off with the police, we talked about schools, we've talked about matatus now. So we are expecting that going forward, we'll get more and more of the long distance truck drivers to shift to leasing. One of the issues is part of what Herbert covered earlier about sometimes the long distance owners really want to own the asset at the end. and because there's that sort of emotional attachment to assets, so to speak. But increasingly, as we are going forward, we are seeing more and more operators that are looking at how efficiently they can use an asset, and those ones will be the prime people to come into the leasing space.
Thank you very much, Kangangi.
Robert, just
yes,
to add on.
Yes, Alan, carry on.
Yeah, just to add on to Kangangi's comments, you can, in other markets, in the UK, for instance, all trucks are leased. These are the trucks which come to our shores as used vehicles. They're mostly ones which have come off lease, large prime movers and trailers that have come off lease, and then the lessor has then unsold these vehicles to Kenyan counterparties. So I think Kangangi is absolutely right. It's just this ownership issue and convincing the trucking owner that this is the right way to go.
Thank you, Alan. I will. The next question, I'll send it to Albert. It's actually addressed to Albert. Are there any disadvantages of adopting the leasing model?
That's an interesting question. I mean, of course, it goes back to what we discussed earlier. I mean, at the end of the day, this asset will revert back to the lessor. So if there's any attachment to the assets, just be sure that we'll be able to it will revert back to the owner. Then I think one of the disadvantages for the business is just the lack of control, So basically, this is an asset that you don't own as a business. Then it is limited what you can do with it from a business point of view. So that's the biggest disadvantage in my point of view, just that lack of control, that the asset can only be used within very limited parameters as per the lease agreement. Robert, you're on mute.
Thank you very much, Albert. Just to add on that is that for the customers to know that on that disadvantage, we actually, leasing companies give a lot of quiet enjoyment, where we basically allow you some flexibilities that you cannot, we do not take full control, especially if it's your production assets or business assets, so that we have to give you proper notice to inspect them. And in terms of limitations, in terms of capping of mileage, capping of usage, these are things that we negotiate and price them as we move on. If parameters change considerably, that's the flexibility of the lessor. So I will take the next question. The next question goes to sorry. The next question goes to Alan. Alan, this question is from Tim Oshiri. Have you introduced leasing to individuals? We've seen leasing in other markets for individuals is big, especially in South Africa. Over to you, Alan. I think you're on mute, Alan.
Yeah. I'm trying to. Can you repeat the question?
The question is from Tim Moshiri. He's asked, have you introduced leasing for individuals like in SA?
Have we?
Introduced leasing for individuals like in South Africa?
Yes. Yes, we have. We have an executive leasing scheme, which we've launched for individuals. The uptake, honestly, it has not been so good. We've because of the rentals that using Kenya shilling interest rates. The rentals are slightly high, but it'll come. I think it'll come because we already today have fleets on our books, which are SMEs, corporates. But I think going forward, we will be extending that more so to the retail book. So the answer is yes, we will.
The next question goes to Shudil. Thank you, Alan. Mr. Shudil, the question is, does it cost higher to lease to individuals than to lease to companies? Would you recommend individuals to lease?
Robert, the answer is a follow-up to what Alan is saying. First of all, in your question itself, you asked Alan what the status of leasing to individuals is compared to other countries such as the US, South Africa. Using the US as the case in point, as you're aware, leasing, particularly in the automobile market, is really the be-all and the end-all way of acquiring a car for individuals. That's the most common option. Operating leases or leases are done. Leasing companies take residual value, and basically the major benefit to the individual is the lower payment. My own answer is as follows. If somebody wants to use a car forever, 15, 20 years, and there are some individuals who like to do that, then they should never lease really. Ownership makes more sense. You buy the car and use it till it's done. But if you want to get in and out of cars every 3 or 4 years, 5 years, then leasing actually makes the most sense. So that's my answer, Robert.
Thank you, Mr. Shudil. Another question still directed to you, Mr. Shudil. Okay, this is H. Mwangi. Brilliant insight from the panelist. Question to Mr. Amamba. What are lease's key obligations for the leased equipment?
If I understand the question correctly, what are the lessee's obligations? Well,
yes, obligations.
The primary obligation, as we all know, is to make the periodic payment on a timely basis. The secondary obligation, I don't mean it's less important than making the payment, is to assure that the equipment is in good stead so that whenever the lessor comes in to inspect it, and as you said earlier, you give notice for inspection, the equipment should be in a proper place, in proper conditions, with appropriate usage, no abuse. So really the obligations are twofold. One, it comes to the payment. Second, it comes to the well-being of the equipment. Those are the two principal obligations that the lessee has.
Thank you, Mr. Shudil. And I will ask the final questions before I come to the panelists to give their final comments so that we can wind up the event. And this question will go to Alan. How would you assist a software company switching to leasing model to push customized solutions into the market? Over to you, Alan.
Thank you for that, and thank you for the question. I think we lease today the equipment, photocopiers, laptops, printers, the full range, not only to companies but also to schools. So I think in terms of the answer to this specific question from the author, maybe what they should do is we should have a separate conversation to see how we can assist through providing a lease to the if they have end users, then we can lease directly to the end user, or we can lease to the company, who can on lease to the end user. Depends on the circumstances. So I would suggest that we take that off record. We can have a separate conversation on that, but it's doable. Yeah, thank you. You're on mute.
Thank you, Alan, for that comment. I will now take a comment from the panelists. I will start with Albert. Final comment to wind up.
I think for me, two things come out. Number one is that the value of an asset is driven by the use, not the ownership. And number two, that we are currently operating in very uncertain times, and as a business, we need to be able to preserve as much cash as possible to be able to ride this economic uncertainty and ride the COVID pandemic wave. So we just need to be able to evaluate the business, and if an asset does not play an integral role in the business such that you need to control the assets, my suggestion is that lease it. That's it.
Thank you, Albert. I will go to Alan.
Yeah, for me, I think this has been a very useful forum, and I think hopefully we've achieved at least partly our objective, which was to enhance the understanding of leasing, and we'll going forward be able to create opportunities that are mutually beneficial for our customers, our potential customers, and ourselves. We firmly believe leasing is a very much a viable business and has a good future going forward, even post-COVID. Herbert's mentioned the initial today, the issues in terms of cash, and cash is king. Sale and leasebacks are the obvious options which can achieve that. So I think I encourage anyone who has questions, further questions, should contact either Robert or myself. I want to also thank the panelists, Sudhir, Herbert, and Kangangi for sacrificing their time to assist. We said 2 hours, and I think it's bang on 2 hours. So thank you very much for attending, everyone, and we look forward to engaging with you in the future. Thank you.
Thank you. Before I go to Kangangi, I'll just put a comment from one of our attendees, Chris. Dear Robert, as a moderator and to your panelists, a very insightful meeting. To Alan and your team, thank you for your support. Sushel. So I will take Kangangi for your final comments.
No, thank you very much, Marete, and everybody else and all the attendees for this opportunity to have this conversation. The only final comment I'll have is obviously as we recover post-COVID, please, and you look at leasing, but prioritize locally made goods. And I would like to invite any of you who is around industrial area to just come and see our assembly line to see what we are doing here, what quality and the processes can be achieved locally here by just the customers supporting one mode of procurement. So locally made goods, vehicles are obviously, it's getting fairly vibrant, but even the equipment that you lease, try and start insisting on them being locally made, because if things like photocopiers are much simpler to assemble here than vehicles. So if you're already doing vehicles, all it needs is for you to demand that you want a locally made one, and then eventually we'll get everybody working to make things locally, and obviously then ultimately release them out. Thank you.
Thank you very much, Kangangi-san. Thank you for that insightful thought of looking for ways to grow to grow actually employment opportunities for our youth and others in the country. Mr. Shudil, one final comment as we wind up.
Thank you, Robert. First of all, allow me to express my gratitude to both Alan and you for having had the privilege of participating in this. I think Alan hit the nail on the head. Increasing customer awareness is the name of the game. A personal comment in conclusion, as Alan introduced me, consulting with leasing companies throughout the world for the last 41 years. And basically, leasing truly makes good sense. Thank you very much.
Thank you, Mr. Shudil. One item I would like to share with attendees, all attendees, is that you can reach out to NCBA Leasing. I will request Emily as she winds up to give the contacts, and actually drop an email and drop a text so that we can carry on the conversation. And thank you so much, Mr. Shudil and all the panelists. I will take this back to Emily to progress.
Thank you very much, Marete, for a wonderful panel discussion. At this point, I'd like to extend my gratitude to all the panelists for that insightful discussion and for painting a very clear picture for us this morning on the value of leasing, especially in the context of business growth, building efficiencies, managing cash flows, and just overall growth and continuity. I was particularly intrigued by the innovation happening in this sector, and well done, Isuzu, for rolling out that pilot program with the Matatu Circles with the intention of empowering and growing the SME sector. We look forward to more innovation and growth. In the interest of time, we have to stop here, and I will share the contacts for further questions or inquiries. Please email us on info.ncbaleasing@ncbagroup.com. I'll repeat that, info.ncbaleasing@ncbagroup.com. You can also call us on 0711 056 444. I'll repeat that, 0711 056 444. Lastly, you can visit our website and get all the information you need from there as well. And it is www.ncbagroup.com. Indeed, ladies and gentlemen, it has been a great pleasure hosting you this morning as we engaged on the power of leasing. I hope you found this session valuable to you, and we look forward to engaging you further to answer any queries you may have and support you with expert advice around the same. To my colleagues who worked hard to put this webinar together and to ensure that it adds value to our customers, thank you for the excellence and great teamwork. And now, ladies and gentlemen, we have come to the end of our webinar. We thank you for your time and wish you a great day ahead. Thank you.
Thank you all.
Thank you all.